Well, TCS stock is fairly up, nearly around 6% in today's trade after the management had announced on the exchanges that the board is going to consider share buyback on October 7th. October 7th would also be the day wherein TCS would be announcing their quarterly results. In fact, if you look at the overall policy of buyback, policy is fairly in line with their stated dividend policy, which is that they shall return 85% of their annual profits either in the way of dividend or in the way of buyback. And TCS, if you look at it, they do have strong cash reserves of nearly around 39,500 crore as of the June quarter. The net worth also is fairly high of nearly around 85,000 odd crore as of FY20. In fact, if you look at the overall buyback, it is likely to be 26,500 crore, which would imply nearly around, which would be a total payout of nearly around 90% for FY21. This is including the dividend, and this is as per various analyst calculations. Look at the last two buybacks. TCS had done a buyback of 16,000 crore in 2018 at a buyback price of 2,100 crore. In 2017 also TCS had done a buyback of 16,000 crore, and that was at a price of 1425 rupees per share. So yes, it is a very interesting news, and the stock is up nearly around 6% in today's trade post this news. We are also seeing an IDBI capital note wherein they do state that TCS would kickstart the entire FY21 buyback amongst the large caps, and this is something that we should be buyback is something that we should be watching out for across the board, especially in the major IT companies. IDBI Capital also mentioned that as per their calculation, buyback is likely to be nearly around 16,000 crore, and also if we factor in the overall dividend as well, it would be a total payout of 23,000 crore for the entire fiscal FY21. They're also stating that, as in the case of previous buybacks, they're expecting TCS to opt out for the tender offer route, and they do expect Tata Sons to participate in the buyback. In fact, apart from the buyback news that investors should be watching out for, we should be also looking at the results in the last quarter. Dollar revenue for TCS had contracted nearly 7%, but in Q2, in fact, we should be seeing the growth or the dollar revenue to come back in the positive zone. We should also, on a quarter-on-quarter basis, we should also be seeing the profitability, according to various analyst estimates, to come back in the positive zone. EBIT margin is also seen to slightly expand in Q2, and also deal pipeline is expected to be fairly healthy. These are the various expectations from the analysts for the Q2 results, and this is also one of the reasons why there is so much of positivity in the stock. In fact, overall, if we just recall what the management had stated just in the last result itself, they had stated that they expect revenue to get back into the flat in constant currency terms by Q4, and flat on a YOY basis in Q3, and they're also stating that overall the deal pipeline is positive. In fact, if you look at the various IT management commentary, they have also mentioned that the overall demand for IT is certainly looking up, and for TCS we should be watching out for both the results as well as the buyback news.